In this presentation, we will continue on to part 20 of our comprehensive partnership problem. We will be taking a look at diagnostics and review of the tax return. Here we are on our form 1065. As we've been entering the 1065, we've done some verifications of our bottom line numbers here with our Excel worksheet, as well as seeing if we're in balance in terms of the balance sheet on the Schedule L. Then we're going to go through basically some review kind of techniques that we would typically do. Typically, you would be wanting to review the tax return to the prior year. So if you input this data into the prior year tax return, I would review that a couple different ways, basically reviewing the forms to see if they tie out. And if you can review the data input screens, going through each data input screen and kind of comparing it to the prior year to see that you have similar data input screens, or when they vary, why they vary, and being able to kind of understand that to yourself. Going to go back to the forms. The other kind of review you can have is typically there's going to be the software will not let you file if there's some kind of critical diagnostic type reviews, is what Lacert will call them, and possibly the software will give you other types of kind of reminders or suggestions about the returns as well. So within Lacert, they call those the diagnostics. So typically you're going to want to check that everything's in balance, everything being input, review the actual tax return compared to the prior year, and then and check the diagnostics as part of the review process. So for example, if we went to the diagnostics here, first diagnostic, this returns requires a partner's representative. If the representative is a partner, make an entry 1, client information in partner number. Please select a valid partner number from the screen. So we're going to pick a representative. I'm going to go back over here and I'm going to say 1 in this screen. And that's going to basically pick the representative of the partner here. So one of our partners will be the representative, basically kind of like the contact person in case of audit for the IRS. So pick that up. And if we go back to the 1065 and we go to page 3 and scroll down to page 3, here you have the designation of partner representative, Tim Jones, and the information here. Now, if we go back to the diagnostics then, next one it's going to say you don't have a telephone number for the representative. So I'm going to go back over here and I'm going to put in a number. And let's see if that will be okay. So I've added some dashes for the formatting. So we're going to go back up top. And then if we go to the forms, now we've added the telephone number here. Going to go back up to the diagnostics. And these are all going to be related to the forms that are still in draft forms. So all this basically says the forms are still in draft forms. Obviously, we couldn't finalize the return. And in other words, we couldn't e-file it with the forms of draft forms. We would need them to be finalized as well. And then this one says electronically filing requires for business representative first and last name. So I'm going to go back over here. I'm going to say the business representative, and we're going to be picking up for the business representative Tim Jones. So I'll pick that up. I'm going to go back to our diagnostics, and scrolling back down on the diagnostics. Most of these look like they're the form. All right. We have the entity's telephone number, so I'm going to go down here. We've got the entity's telephone number. All right, I'm going to keep that. And I was missing a digit there, so that's why it was giving me that diagnostic. So I miskeyed the telephone number. All right, so that's good. Pick that one up. Scrolling back down. Now, in this software, we'll typically have the critical diagnostics up top. And that means if you don't somehow deal with those in some way, possibly you could even like check them off. But if you don't deal with them in some way, you may not be able to actually process or e-file the return. Then you have the information diagnostics, which are down below, which may not be the critical. In other words, they may be something that are kind of more suggestions. You could probably file the return without them, but you're given information about them. So you probably, as you go through these, might want to check them off and cross them off as you note them. So Form 1065, Schedule B, Question 18A concerns the filing of Forms 1099 and has been checked no by default. So I'm going to jump to that screen, and that's going to be a useful one to take a look at. And we're going to say, if required to file Forms 1099 in the current year, did you or will you file all required Forms 1099? Now, most of the time, if you're a substantially sized business, you're going to have 1099s, meaning you had contractors worked for you. And if they weren't corporations, then you typically will often have to give them a 1099. So they're asking, did you do so? Did you have some contractors and file the 1099? So we're going to say yes with a 1 here, and that'll change that mark. If I go back to the forms, we're then going to go to page 3. So on page 3, we're going to say that 16A and B, did you make any payments in 2019 that would require you to file forms 1099? We're going to say yes. Typically, we would have to file the 1099 for contractors who weren't corporations. And then if yes, did you or will you file the forms 1099? And we're going to say yes. So that's a typical change that you would often make. So then I would go through and basically just check everything off, review the tax return. We've reviewed basically the bottom line numbers. So you can go through it from top to bottom again. We've got the general information up top. Page 1, we've taken a look at a lot. We've got the bottom line number down below. We've got the signature paid and the paid preparer if it applies. Page 2 then, we go up top. I'm going to say this is the Schedule B, other information. We got the domestic general partnership. So we got the domestic general partnership 2. At the end of the year, did any foreign or domestic corporation, partnership, trust, or tax-exempt organization or any foreign government own directly or indirectly an interest 50% or more? We're going to say no. B, did any individual or estate own directly or indirectly an interest of 50% or more? And that is true, yes, because we have 2 individuals owning it. Number 3, at the end of the tax year, did the partners own directly 20% or more, or own directly or indirectly 50% or more of the total voting power of all classes of stock entitled to vote of any foreign or domestic company? We're going to say no. And then B, own directly interest of 20% or more, or own directly or indirectly an interest of 50% or more in the profit, loss, or capital in a foreign or domestic partnership. Again, we're going to say no. Number 4 says, does the partnership satisfy all 4 of the following conditions? A, the partner's total receipts for the tax year were less than $250,000. B, the partnership's total assets at the end of the year were less than $1 million. Schedule K1 are filed with the return and furnished to the partners on or before the due date. And D, the partnership is not filing and is not required to file M3. We got no here because we're over. And then number 5, is the partnership a publicly traded partnership as defined in section 469K? No, it's not a publicly traded partnership. 6, during the year, did the partnership have any debt that was canceled, was foreign, or had the terms modified as to reduce the principal? No. Has the partnership, number 7, filed or is it required to file Form 8918, Material Advisor Disclosure Statement? No. 8, at any time during the calendar year 2019, did the partnership have an interest in or signature or other authority over a financial account in a foreign country? No. 10, at any time during the tax year, did the partnership receive a distribution form, or was it the grantor of or transferor to a foreign trust? No. 10, is the partnership making or had it previously made a Section 754 election? We're saying no here. C, is the partnership required to adjust the basis of partnership assets under Section 743B? No. 11, check this box if during the current year, prior tax year, the partnership distributed any property received in a like-kind exchange. We have no there, or not applicable. At any time during the year, did the partnership distribute to any partner a tenancy in common? No. 13, if the partnership is required to file Form 8858, information return of U.S. persons with respect to foreign disregarded entities and foreign branches, enter the number here, not applicable. 14, does the partnership have any foreign partners? We're going to say no. 15, enter the number of Form 8865, not applicable. 16, did you make any payments in 2019 that would require you to file Forms 1099? That's the one we changed. Yes, we did, and we filed the forms, would be what we would hope the answer would be. 17, enter the number of forms 5471, information returns, not applicable. 18, Enter the number of partners that were foreign governments under Section 892, not applicable. 19. During the partner's tax year, did the partners make any payments that would require it to file Form 1042? We're going to say no. 20. Was the partnership a specified domestic entity required to file Form 8938? No. 21. Is the partnership a Section 721C partnership? No. 22. During the year, did the partnership pay or accrue any interest or royalty? Not applicable. 23. Did the partnership have an election under Section 163J? No. 24. Does the partnership satisfy one or more of the following? The partnership owns a pass-through entity with current or prior year carryover. The partnership aggregate average annual gross receipts for the 3 tax years preceding the current tax years are more than $26 million. The partnership is a tax shelter and the partner has business interest expense. Those don't apply. We're going to say no. 25. Is the partnership electing out of the centralized partnership audit regime under Section 6221B? We're saying no here. Then we have the designation of the partnership representative. That's going to be Tim Jones, in this case, one of the partners. 26. Is the partnership attaching Form 8996 to certify as a qualified opportunity fund? We're saying no. And 28. At any time during the year, were there any transfers between the partnership and the partners subject to disclosure requirements? We're going to say no. Then we're going to go to page 4. Page 4 is going to be our Schedule K. We spent some time with the Schedule K as we have gone through this tax return, so I won't spend a lot more time here on it. Then we're going to go to page 5, where we had the analysis of the net income. And then the Schedule L, where we once again have spent a lot of time with the Schedule L. Scrolling back down, then we have the M1, where we have spent a lot of time, and the M2. Note on the M1, we forced, the Schedule L, we forced that to populate, but it should populate anyways now, so I should go back to the override in here and say that I had gone to the miscellaneous. You'll recall that I went down and forced the Schedule L to populate. So now it should populate anyways because it's going to be required anyways, but I'll just remove the override, which would force it to populate. So if I go back over, it will then populate. It's kind of useful to do that if you're doing some smaller type of returns because, again, it's nice to have the Schedule L, but if you don't need to send it in, then maybe you don't want to override to send it in possibly, although I'm not sure it'll hurt much if you do. Then if we go through some of the other forms, we got the information on partners' ownership, 50% or more of the partnership. In part 2, we have the individuals or estates owning more than the 50%, where we have the James, who has the 70% interest. We've got the Schedule D. This is where we reported the capital gain in a similar fashion as we would in an individual return. We've got the Schedule K1s. Those are going to be the pass-through information that's going to go through to our 2 partners, Tim and James, and then they will use them to report the income on their individual Form 1040. Then we have the 1125, which is our cost of goods sold calculation. We've got the 4562, election to expense certain property under the Section 179. So this has to do with the 179 deduction. We had the 179 depreciation or expense in the first year, as well as a sale related to the 179. This is going to be an e-filing document if we're going to be electing to e-file the return. Then we have the statements. So within the statements, we have the comprehensive problem 1 statement, statement 1. This is going to be where the other deductions were that were on the first page of the 1065, the advertising, the contributions. We could go back through and remove some of these items. Notice it's a little bit messy here with these kind of M1 adjustments. We could delete both of those and they would net out. So we could go through there if we chose to. Scrolling through here, we have the charitable contributions. This is Form 1065, Schedule K, line 13A. That's going to be the cash contributions. We have the Form 1065, Schedule K, line 20C, other reportable items. This is the disposition of assets with prior Section 179 expenses. So this has to do with the sale of the fixed asset that we had. And it's reported down here because we have this 179 issue that we have. So we have the asset description, tax years passed through, 2017, date acquired. Here's the date acquired, date sold, the sales price, the cost or other basis plus expenses, the depreciation allowed or allowable, that's this 10,000, and then we have this section 179 expense, which was the 50,000. Then we have the other current assets. This is included in the Schedule L, the balance sheet, where we had the list of other current assets, which is given the detail, which was on one line item on the Schedule L. And then we have the Schedule M1, line 4. This is the gain on the disposal of assets. And then we have the M1, line 6, also related to the gain on the disposal with the 179 assets. We also have the income tax summary form where we have the trader business income, trader business deductions, the Schedule K income, the Schedule K deductions, the Schedule K self-employment, Schedule K alternative minimum tax, Schedule K other, Schedule K L with the balance sheet, which is the balance sheet. Then we got the information for the balance sheet on the summary, the ending assets, and the ending liabilities and capital. We also have our worksheets for the Form 1065 Schedule L. So this is the beginning depreciable assets placed in service in the current year, depreciable assets sold, and then the ending depreciable assets, the 1065. This is on the Schedule L, line 9B, beginning accumulated depreciation, current year book depreciation, and accumulated depreciation on the assets sold. So this is calculating those amounts. Remember that we kind of forced them at first, and now we're letting the software calculate it. These are the calculations, so you can see what the calculations are to get to those ending numbers on the balance sheet on the Schedule L. And this is going to be the Schedule M1, line 7A, depreciation recorded on this return, and then we have less the depreciation deducted on the books. So we told the software to have that difference between the depreciation. This is represented on the M1, and this is the detail of one of those M1 calculations. We then have our depreciation schedules that we have looked at in prior presentations when we went through calculating the depreciation. You'll recall that this is one of the more complicated components when you have the corporate returns, because there are going to be a lot of depreciable assets depending on the type of partnership that we have, the business returns type of partnership we have. So we have the regular depreciation, which you're going to have a complex schedule because, again, you could have the depreciation, you have different categories, different assets within those categories, fixed assets within the categories, and you have possible 179 and special deductions in addition to normal depreciation on the tax basis. Then you have the AMT schedule, and then you have the book schedule. The book schedule may not be used all the time because the books, they may just be doing their depreciation if it's a small partnership using the tax depreciation, and therefore it'll be a little bit more simplified here, but those are going to be the schedules. And note, in 2019 software, if you're using Lacert, it's nice that they actually give you the depreciation schedules for 2020 as well. That'll help you to kind of plan for the depreciation in 2020. You can help actually record depreciation as you go without waiting until the 2020 return. Based on the information that's currently in there, you can calculate 2020. You can also, if you buy stuff or sell things in the current year, you probably want to copy over the return, and then let Lacert do the calculation. In other words, if I sold something in 2020, this is a 2019 return, I can put it into the system that it was sold in February of 2020, and it won't affect the return. Although you'd probably still want to make a copy of it because you'd probably be best, but it would put the information in there as of the later time period, and then you can check your schedules and calculate depreciation as the year is going as well. So that's a useful tool. So that's gonna a recap of the forms. And again, the next thing I would do is basically go to the detail and actually go through each data input screen and review each data input screen. And if you have the prior year tax return in the software, then you can review your data screen this time and to the prior year data screens and just see if they look like they should be similar, and if there's any deviations from them, that you can basically see why that is, justify that to yourself. Next time we're going to go to the forms here, and we're going to be exporting one of our Schedule K1s from the tax return to an individual tax return, a Form 1040.